Next question. Consider following simple information. Sales is 1 lakh. Profit volume ratio is 60 percentage. Fixed cost is that is 30,000. 10% debentures of rupees 2 lakhs. Income tax rate is only 40%. Number of equity shares are 10,000. You are required to calculate. A few questions are provided to us. I want you to make the calculation of answer of the first 4 questions first of all. So first of all, we are required to make the calculation of the earning per share. Profit volume ratio is given, so we can compute the variable cost to sales ratio. Run an answer. Working note number 1. Calculation of variable cost to sales ratio. It will be computed as 100 minus profit volume ratio. So 100 minus profit volume ratio is 60. So variable cost is 40. Working note number 2. Calculation of earning per share. So let us start with the answer. Calculation of earning per share. We start with the sales value. Sales value is given 1 lakh. Variable cost is 40% of the revenue. 1 lakh into 40%, that comes to 40,000. Contribution is 60,000. The amount of the fixed cost is 30,000. So the operating income is again 30,000. Amount of interest 2 lakhs into 10 percentage, that comes to 20,000. Earning before taxes 10,000. Income tax rate is 40 percentage. So it is 10,000 into 0.4, that comes to 4,000. Earning after taxes is 6,000. Number of equity shares are 10,000. So earning per share is 0.60. The next question is calculation of DOL. It is contribution upon EBIT. This is a simple formula that we have. The amount of contribution is 60,000 and EBIT is that is 30,000. So 60,000 upon 30,000, and the answer comes to 2. Degree of financial leverage. It is EBIT upon EBT. EBIT is 30,000 divided by EBT. EBT is 10,000. There is no preference dividend. So the answer is 3. The last is DCL. It is DOL into DFL. So it is 2 into 3, that comes to 6. The question says further regarding if the sales is increasing, minimum EBT, increasing EPS. So on the questions are there say regarding the change. But the first 4 questions are done like this. Sixth question. If sales of the company are increasing by 5%, calculate the revised EBT and EPS. Sales of the company increasing by 5%, calculate the revised EBIT. That is a question. Okay. What is the sales of the company right now? 1 lakh. So it will increase by 5%. So sales 1 lakh plus 5%. So it is 1 lakh 5,000. Fine. Variable cost, it is 40,000 plus 5%. That comes to 42,000. Difference of both of them is contribution 63,000. The amount of the fixed cost is going to remain same. The amount of the fixed cost is 30,000. So EBIT is 33,000. So question number 5 is completed, wherein the question says that the sales increases, calculate the revised EBIT. Next, sales increases by 5%. Calculate EBT and EPS. So this is 1 lakh 5,000. This is 42,000. This is 63,000. This is 30,000. This is 33,000. Minus interest. What is the amount of interest? It is 20,000. Earning before taxes, that is an amount of 13,000. Now this time I am writing earning after taxes directly. It is 60% of earning before taxes. So 13,000 into 0.6. That comes to 7,800. It is 60% of EBT. Divided by number of equity shares. Number of equity shares are 10,000. And we get EPS. That is 78 paise. This is the way we can make the computation of the EPS. Earning after taxes 7,800. Number of equity shares are 10,000. And earning per share is 78 paise. This is what we understand. Seventh question. The question says that the company wants to keep minimum EBT of 7,500. Calculate maximum affordable reduction in the sales and sales value at that time. So earning before taxes is provided to us as 7,500. The amount of the interest is not going to change, 20,000. Earning before taxes, earning before interest and taxes is 27,500. You make a backward calculation. Fixed cost is 30,000. Contribution is 57,500. So sales will be 57,500 divided by 0.60, because contribution is 60% of the sales. Okay, PV ratio. So 57,500 divided by 0.6. That comes to 95,833.33. So for seventh question, we can write the detailed answer like this. In order to make sure, comma, that EBT does not fall below rupees 7,500, comma, sales should not reduce below rupees 95,833, comma, it should not reduce by more than rupees 4167. How this 4167 is found? 1 lakh minus 95,833. That is the way we can give answer for the 7th question. 8th question. If the company wants to increase the EPS to rupee 1, calculate the required increase in the sales and value of sales at that time. So EPS is rupee 1. Number of equity shares are 10,000. So earning after taxes is 10,000. It is 10,000 number of equity shares into 1 rupee per share. That is the way we make the backward working. This is the backward working. Income tax rate is 40%. So 10,000 is required earning after taxes. So 10,000 divided by 0.6. That comes to 16,667. Amount of interest is 20,000. This is 36,667. Amount of the fixed cost is 30,000. So contribution is 66,667. Sales 66,667 divided by 1 minus 0.4. So divided by 0.6. 1,11,111. Variable cost 44,445. This is the way, so we make the computation of the sales. So answer of the 8th question, in that, in order to increase, comma, EPS to rupee 1, comma, current sales should increase by rupees 11,111, comma, it should increase to rupees 1,11,111, full stop. This is the way we are required to write answer.